Hey guys, good afternoon. I'm going to do a quick recap. So we had the break of the JHEQX again today. So let's go over this real quick. Hold this up. So you remember the big tan- tariff tantrum we had the other week, right? April 4th, Sunday, and it broke down and went way, way lower and then came back up, temporarily broke above it, came back down, broke above it, and they finally wrestled it to close back below the level. Well, this Sunday, it broke again. And so all of this got pinned at 40, at 54.60. 54.60. Okay. This was a rip. But 54.60 right here, you can see it. This was a short call that they purchased to keep the market below it so that they could get it down back below the 52.90 to close the level by that OPEX. So they got this after the fact. This got delta hedged. Once it broke under, they're short. Then they have to delta hedge it. And then they broke it again. It kept rolling up and down over it. And that's when they got that short call at 54.60, which is 1,000 points above their short put. So that a caller, they have a long put and a short put and a short call. So we're talking about the long put at 52.90, which is being hedged. So it's very rare for that to get broken. The institutions, again, want to stay long in the market. You're talking about, a lot of sovereign wealth funds and large, um, pension funds and 401k funds and things like that will invest in the JHEQX so that they can stay long only in the market. So this is the JPM hedge because they're now short below the 52.90 or the equivalent. And how to get the equivalent is you go to the Yahoo Finance and you look at your BTIC, your basis trade on index close. And every day it has a level, and the level can change during the day. It's dynamic. It just flipped again, 27.50. So you would take your 52.90 and add 27.50, and that's 53.17.50. And so you can see this is dropping 53.17.50. So the hedge line is now 53.17.50. It keeps dropping. So whatever the ES equivalent is, but you can see that these are wicks above it. They're not allowing the market to get up there and close and stay above it. This is the hedge line. They are short below that level. If it does breach the hedge line, they have to delta hedge the hedge. So they're already hedged short of their main position, which is long only in the stock market. But because they're hedged, that allows their clients to stay long only without, going through this tariff tantrum that the rest of us are going through. So as soon as they can announce a resolution to this, hopefully it's everybody understands that really all we have to do is cover the cost of production to be able to reshore some manufacturing, national security issues. You don't want a foreign country to own your antibiotics or your steel or things like, your chips, things that you have to function as you know, the largest $50 trillion market cap economy in the world. You need a certain amount of infrastructure to support your own people and, That is going to take some reshoring of manufacturing. That is going to take a little bit of tariffs. They're not draconian. I mean, goodness gracious, I think we all know that the Europeans and the Canadians both institute terrible tariffs on the United States, precluding us from selling our products in their country. But we take all of their products. It's crazy how this works out. And we subsidize Canadian products. They're millions and millions and millions every year that we don't even have to buy, but we do it to support their markets because they're supposed to be our allies. But instead of being our allies, when we're trying to recover, you know, our manufacturing base back, they're throwing these hideous tariff tantrums and overblowing everything, making it look like the world is coming to an end when it's not. There's no reason to destroy this much capital in the market over this. We're talking about salary and benefit differential between, you know, the cost of paying someone in the United States versus the cost of paying slave labor in China or Bangladesh. That's all it is. So when you can get off whatever mainstream media is throwing in your face about it and realize that that's the only thing that has to be recovered, you'll realize how small of an issue it really is, and it never should have been offshored the way it was. I mean, can you imagine if you had your own country of 350 million people in it? You, as the king, decide that everything that they need to be able to stay healthy or survive would be offshored, you know, all the way around the world to someone who has openly said that they're your enemy? I mean, and wants to compete against you and dominate you? I mean, that's ludicrous. It's ludicrous. I wish Stephen Miller were here. He could tell you I'm right. So I know I sound like a ranting lunatic, but I'm not. It's not a big issue. And there hasn't been anyone to be able to successfully articulate that to you because of all the smoke and mirrors being thrown up everywhere in the world to make it sound like, we're just trying to overthrow the world, and we're not. It's to be able to bring back some manufacturing here and not get bombed by, I mean, um, product bombed. Remember what happened if you're not old enough like I am to remember, when China was just dumping steel and cheap drywall and everything in the United States, not allowing our companies to survive. We would have a product and pay people salaries and benefits and things like that. They were able to get these cheap slave labor, and then they flooded our markets with these products to drive our producers out of business. You can't allow that to happen. You can't compete us out of business because you hire slave labor. That's wrong. It's crazy. And to think that we could live in a world where we would allow that to happen again, it's even crazier. So I'm sorry. I am passionate about this. My position is right. I will defend it. It's my flag. It's like find an issue, raise your flag on it. There's no reason we can't have a small amount of tariffs. None. So just, realize that and we can all get along. All the little doggies can get along again. So, anyway, I'll get off my soapbox. This is the JHEQX, and they're defending a short position right now. The market is short. If it will, like I said, go above, it won't just sit on the line exactly. There will be, some wiggles around it and even a temporary break. You see how here it went up to the daily one and came back down? Here, they got them up to this is the 1 hour IB3. You can see the 1 hour initial balance. It broke, went up to the IB3 and then came back down. So they're giving it a very short leash this time. They didn't allow it to get to the 53, 55, which is a level that, my trading group identified as a strong level with a lot of volume interest, limit orders sitting there in that, and futures limit orders, which are different than options. Um, but still, the strength of the JHEQX short position cannot be understated. It's a huge, I think it's 50 billion. I could be wrong on the size of that hedge fund. It could be 80 billion. I'm not sure what the exact number is, or it could be 30 billion. It's huge, but and it changes. The money has been flowing out of the United States for some reason over the last month, um, out of the equity market. So our allies who don't want us to have the ability to pay people and recover our cost of production to bring our manufacturing back are shorting our markets now after we spent decades of supporting them. Decades. And we're still sending 100 million a week to EU. It's insane for them to align with foreign adversaries like China, who's trying to go behind our backs and work with EU and Canada and Mexico and India and Japan to shut down the United States from being able to manufacture some products. It's wrong. And I'll call it out every time. I mean, it is wrong. It's crazy wrong. And I just wish we had people better able to articulate it. So let us get on the right side of that red line, which is above it, so that they're not having to hedge it, and keep our markets trading the way that they normally do. I mean, they normally trade above that long put. It's not challenged very often. It's, in fact, very rare for that to get breached. And especially to have JP Morgan hedge it to the end of the month. Like right now, we're hedged through April 30th, tied to this level, going short below it. So that's what it looks like to me. If you have a different take or think that I'm completely wrong in my analysis, I'd love to chat with you about it. Let me know. Drop some comments. Otherwise, hello, 5290, we're back again, and we could literally be pinned here for the rest of the month. All right. Get used to this level if we can't move away from it, long or short. All right, you guys be good, and we will see you tomorrow. Sorry for my frustration. It's just, sort of the whole thing is so nonsensical. You would think that people could grow a brain and understand that there is a reason we need to manufacture certain things in the United States. I mean, I guess I'm arguing for, a return to sanity. I don't know what to say. All right.